Hello, I'm Peter Towers, Managing Director of ESIC BIZTOOLS. Welcome to Accountants Minute. Accountants, the legislation for innovation companies presents great opportunities for you. The House of Representatives has passed the legislation for the federal government's major amendments to the Corporations Code and the Income Tax Act for the two new types of companies that the government is optimistic will be operational by the 1st of July 2016. These companies are crowdsourced funding companies and early stage innovation companies. So let's have a look at the key criteria of both of these new types of entities. Crowdsourced funding, as the name suggests, has been established to assist with raising of money from the public for business ventures. The government has decided that these entities should be a public company, so obviously they need 3 directors. The maximum capital that can be raised in a 12-month period is $5 million. The maximum investment from a retail investor is $10,000. There is no limit for a sophisticated investor. The companies must have assets valued at less than $5 million. The legislation introduces a role for an intermediary, which is a business with an Australian financial services licence, who will be the media by which the company is able to promote its investment opportunities to the marketplace, and the intermediary will collect the money from the potential investors. Some of the rules that normally relate to public companies have been relaxed by the government for the first 5 years. The prime ones are that if the company has raised capital of less than $1 million, there is no need to appoint an auditor. I don't quite agree with that, but that's what the government's decided. And a company does not need to have an annual general meeting, and an annual report does not have to be distributed to all shareholders. Obviously, at $10,000 limit per retail investor and the ability to raise up to $5 million could mean that there's a large number of shareholders in crowdsourced funding equities. The other company that the government is forming is the Early Stage Innovation Company. This legislation has also passed the House of Representatives and is currently in the Senate. Generally, the rules say that company has to be under 3 years old, has to have annual sales of less than $200,000 per annum, and annual expenditure of less than $1 million per annum. To be eligible for the status of early stage innovation company, the entity will have to pass a 100-point test, which is going to look at things like research and development, whether they've been part of the Accelerating Commercialisation Grant Program, whether they've already raised some capital, and the amount of money that's mentioned is $50,000, whether they've registered any patents or innovation patents, or if they've been involved in an accelerator program. These companies will be able to raise up to $50,000 per annum from retail investors, and there's no limit for sophisticated investors. These companies need to be involved in business activities relating to products, processes or services. The other major area of interest for these type of companies is that an investor will obtain a 20% tax rebate on the value of their investments up to a maximum rebate of $200,000 per annum, and an investor will be able to avoid capital gains tax if they sell their shares after holding them for 1 year and less than 10 years. If a capital loss is incurred in that period, that will not be a tax deduction. So that's the offsetting against not having to pay capital gains tax. So that's the rules for the early stage innovation company and the crowdsourced funding company. Of course, these entities are going to have to be investment ready, and this is where accountants come into play. Companies will need to understand their objectives, have a business plan, budgets, cash flow forecast, have looked at their vision, have summarised their intellectual property. How is the intellectual property protected? What have they done with patents? Have they processed them through and have them appropriately registered around the world? They'll have to determine the value of the shares to issue the share certificates for the cash that they're going to receive. Obviously, they've got to appoint directors, company secretary, and appoint accountants who can keep the accounting records for them. These two new types of entities are a great opportunity for a wide number of businesses in Australia. The government has indicated that, according to their figures, 4,500 businesses were unable to raise capital in 2015. I think it's anyone's guess as to how many new entities are going to get formed over the next 12 to 18 months. But there is a fantastic opportunity for accountancy firms to make this the springboard to get involved in offering a wider range of commercial services for your clients. And for that reason, we are conducting a special webinar on the Thursday the 21st of April to give you an insight as to how these companies are going to operate. I don't expect the Senate will have passed the legislation by then, but you'll get an insight as to what is coming from the 1st of July, so that if you've got clients coming to talk to you, you'll be able to communicate with them. We have a number of other keynote speakers in that webinar. We have representatives of the business angel community who are ready and willing to consider investments in these new type of companies, as long as the companies have been appropriately mentored and encouraged in their preparation of the required documents. And we also have the managing director of BIZTOOLS, a company which has assembled over 80 experts in a wide range of disciplines who can review the products for early stage innovation companies to issue a certificate that will help in assembling the 100 points that those companies need to satisfy ESIC that they are indeed eligible to be called early stage innovation companies. So the webinar is on Thursday the 21st of April at 12 noon. Please go to our website www.essbiztools.com.au to register. Thank you very much for listening to this commentary today, and I look forward to talking to you in our special webinar on Thursday the 21st of April. Have a wonderful day. Goodbye.